Hey friends, welcome back. It's absolutely terrific to have you. Thank you so much for pushing play. I have one of the great truth tellers on the line with me, a friend of truth, a friend of SGT Report. It's Dave Kranzler from Investment Research Dynamics, and boy, are we going to break down some illusions. Dave, how are you?
I'm well, thanks. Want to wish everyone a happy new year. I honestly hope 2016 isn't as ugly as I think it's going to get, but having said that, make the best of what you got.
Yeah, make the best of what you got, but keep your eye on the ball, keep your eye on tyranny, and keep your eye on the illusions. We're going to break down many of the economic illusions on this call in detail. But the first thing I want to do is give a shout out to a remarkable YouTube channel and a researcher out there who really understands bills of tyranny and how to dissect them. And it's the channel Are You Ready For It? RURDY, the number 4 IT. And she does an absolutely amazing job breaking down the treason coming from the Obama White House as he implements severe gun control. I wanted to shout out, Are You Ready For It? Because she is a true patriot. Dave, I wanted to talk to you too about breaking down illusions. It's absolutely shocking to me as we look at the latest economic numbers coming out. Things continue to get worse, including a new low for the Baltic Dry Index, and Deutsche Bank warns a perfect storm is coming. Do you think the common man has any idea what they're in for as we take a look at the impending collapse, the global collapse?
That's actually a really interesting question because it's something I've been thinking about for the better part of the last year, and every time I go into a Costco and I just watch these people herd around Costco, they almost like it's like they have a sense of entitlement that they can just walk into a place like Costco and buy basketfuls of food, and a lot of the stuff is stuff you don't even need. And I just wonder, I mean, do they really understand what's the tidal wave tsunami that's coming at us, and they just don't care? Or are they just completely, whistling past the graveyard? And I think it would make an interesting street poll for someone just to walk around, one of these YouTube guys like a Mark Dice or something,
Mm-hmm.
and just start asking people, what do you think of, do you really understand what's really going on? What do you think about the economy? And just get the common person's outlook, because I have no idea. I do think that there's certain demographics that are getting squeezed, but I also think there's right, at least up until now, the government's made enough of an outlet available for them so that they stay placated and can survive well enough so that they don't have to revolt. You know what I mean? Like the disability, the Social Security disability, and the fact that, Obamacare has made health care available to people who otherwise, at least theoretically, couldn't afford it. Food stamp welfare, all that stuff.
Mm-hmm.
So there was an interesting article that was released. I can't remember who did the study. It was either the Wall Street Journal or Bloomberg. Actually, it was the government's own study. It was reported in Bloomberg, and it talked about how the millennial demographic, a lot of them don't even enter the workforce. They either live at home with their parents and do whatever, or a lot of them are actually applying for the Social Security disability, which kind of surprised me. And then a lot of them, you can go and you can go to these online universities and you can get student loans for that. And when you apply for a student loan and get approved for it and enroll somewhere, you're taken out of the workforce.
Mm-hmm.
So you're part of that huge percentage of the population that's not even participating in the labor force. So there's broad demographic shifts going on and changes that I think at some point down the road there's going to be an earthquake that occurs, a social earthquake. But I think for the time being now, I think the government's made it easy enough for people who can't really afford to live day to day to get by.
Well, they're painting the tape, too. Economically, they're painting the numbers as we've dissected many times. We're talking about unemployment being at 5-6%, which is absolutely ridiculous. According to John Williams at Shadow Stats and other sources, it's much closer to 20 to 24%. And I think you hit the nail on the head with the Costco crowd, right? I've often said, Dave, if you're gainfully employed, if you still have a decent job and you can still pay your bills, things look pretty good to you if you're not paying attention to the real data, the data that we cover at SGT Report. And, you hit the nail on the head the other day, too. On January 4th, you had an article called, "Here's the Primary Reason the United States is Collapsing." And you write, "The U.S. is collapsing politically and economically because the populace has enabled it to fail by choosing to conduct their lives in ignorance." And then you posted this Mark Dice video. He's wearing a Sound Money t-shirt, and he's trying to give away a 10-ounce bar of silver or a chocolate bar, and most people take the chocolate bar.
Everyone did.
It's your choice. A free 10-ounce bar of silver bullion or a free king-size Hershey bar.
I think I'll take the Hershey bar.
Go ahead.
Steak
It's your
it.
lucky day.
What?
Just offering people a free Hershey bar today or a free silver bar. Which one would you prefer?
Silver. I'll take the.
Who needs a silver bar?
Well, the people are so dumbed down that they don't understand history, sound money, what the Fed has done to their currency, and that hyperinflation is right around the corner. They don't get it.
The funniest part of that video is when that woman questions whether or not the Hershey bar is real.
I don't have any way to do anything with the silver.
Okay, so you'd prefer the Hershey bar?
Yeah, but is it real?
Yes.
He doesn't even care about the silver. I mean, he's dangling $150 in front of their face or a $2 Hershey bar.
Well, I got to tell you, again, as it relates to Costco, things look pretty good right now because the dollar is still king. But they're not going to stay good forever because, as you and I know, up is down, black is white, slavery is freedom, war is peace, ignorance is strength, and Amazon at $633 a share with a $297 billion market cap speaks to the absolute lunacy of painting the tape of what these markets are. There's $1.5 billion funds now closing down, saying that they can no longer, in an environment like this, be stewards of their clients' money because the market is broken. Now, with Amazon at $633 a share, silver is at $13.98 or so, Dave, as we're having this conversation. And even if you believe that there are 5 billion ounces of silver above ground on planet Earth, which I don't believe, 5 billion ounces of silver times 14 bucks gives silver a global market cap of $70 billion. Amazon alone is valued at $300 billion. This is pure lunacy, is it not?
Amazon is, it's interesting that you wanted to bring up Amazon because I'm in the middle of writing a blog post about Amazon.
Here, I just want to interject and say Amazon has been bugging me because it's a fly in the ointment. I remember when Amazon back in 99, 2000 hit its peak and then plummeted back down to $5. Dave, I specifically remember when Amazon was $5 and I thought I should probably buy 1,000 shares and I didn't do it. And here now it's back to $300 billion market cap. This bubble, this current bubble, has now reinflated, and it's a bigger bubble than we saw in the internet age, during the internet bubble.
Yes, with the technology sector, especially when you look at the private equity unicorn business going on out in Silicon Valley, that it is incredible that so close to the previous tech bubble that another one has been allowed to foment. The thing about Amazon, if you adjust what they call their GAAP numbers, their GAAP financial statements, and you adjust them for true GAAP, not this adjusted GAAP that everyone reports these days. On a traditional financial ratio analysis basis, $5 is probably about the right price for Amazon stock. And I was just looking at some numbers. So for instance, it's got this cloud services business. They call it Amazon Web Services, and it essentially is just cloud computing. It's cloud computing, storage, and services it caters to tech companies, and most of their business is done with, most of their contracts are with these Silicon Valley startups, as it turns out. And I there's an insider in Silicon Valley who emails me a lot of this stuff. So this is like information that doesn't get flushed out in the media or in Wall Street reports or even in some of these other guys' reports like the one that David Stockman did. But something like 90% of their contract base is with these Silicon Valley startups. Most of them aren't even going to be around in the next couple years. And the market cap that's being, this part of that 297 billion that's being attributed to the cloud compute, Amazon's cloud computing, is 150 billion. Well, on a trailing 12-month basis, their revenues were just under $7 billion. So you're looking at, it's trading at 21 times, just the cloud computing market cap attribution is 29 times or 21 times its trailing revenues. Now what they're saying is that it produced a little over on a trailing 12-month basis, a little over $1 billion in operating income. So that's not even net income. Price to operating income isn't a standard metric, but if you want to use that, I mean, you're looking at 150 times its trailing operating income. Yeah. And what I've decided is that Jeff Bezos is probably the greatest stock promoter of all time. Mm-hmm. And the genius of Bezos is his ability to bamboozle big investors and retail idiots into piling into his stock every time he announces a big idea. Well, these big ideas never produce net income. In the 25 years that Amazon's been a public equity, it's delivered a cumulative of $1.9 billion in net income to the shareholders. That's over 25 years. In 2014 alone, Bezos made $16 billion on the stock. Yeah. I mean, there's just a massive disconnect there.
Well, it's a Ponzi scheme, and I say that not lightly. It is a Ponzi scheme in that I believe that the hyperinflation that we should be seeing in the real economy is taking place in these select tech stocks. Netflix, Google, Amazon, you name it. These stocks have enjoyed hyperinflation to the degree that they're trading beyond the realm of plausibility. They've broken the economic rules that allow for a healthy market, which is why the $1.5 billion Nevsky Capital Fund is shutting down, and they say it's time to accept that what we have done has worked brilliantly for 20 years, but does not work anymore. For the laws of economics will never be repealed, but for now they have been suspended, and may be for some time. An indefinite period involving interdeterminate levels of risk during which we think it would be wrong for us to be the stewards of your money, end quote. It's a pretty big deal when a $1.5 billion fund wants to do the right thing in a market like this and decides the right thing is to give the money back to their clients. That really speaks to the unhealth of this market, Dave. And Market Watch, you sent me an article which is fantastic. The Fed's Williams foresees up to 5 rate hikes this year because the economy's doing so well. Well, if the economy's doing so well, why is the Baltic Dry Index hitting new lows? And Deutsche Bank warning us that a perfect storm is coming.
Just real quickly, I wanted to just circle back to our discussion about Amazon, and you're right, it is a Ponzi scheme, and I've got a research report that goes into that in detail available on my website. But to the extent that the economy really is starting to collapse, the stock market at some point will get the collapse of the economy is going to create a gravitational pull on the stock market, and there's going to be an air pocket drop. And I've actually introduced a research service on off of my website. It's a monthly subscription service where I put out weekly reports with ideas for shorting the market, and I try to find ideas that are kind of off the radar screen. So it's not going to be, oh yeah, short Amazon, Netflix, and Google. Mm-hmm. I'm looking for companies that are going to get hurt the hardest by the economic collapse that's coming, and yet their stocks are not even remotely close to reflecting that. There's a lot of construction industry related type stocks, housing industry, etc. Caterpillar is a good example of one of that. That's on the radar screen, but it's still extraordinarily overvalued, and not just because their core business is plunging. It's because they're basically sitting on a financial ticking time bomb.
We've covered that with Andy Hoffman in detail. Caterpillar is sort of his canary in the coal mine for the disease, the unhealth of the global economy. Dave, aren't their revenues down something like 28, 30 quarters in a row now?
Yes, and it's true that it's a good barometer for global economic health, but the hidden landmine in there is their financial risk. They do all of their own financing. They finance all of their sales using long-term installment contracts and debt agreements and leases. And as those things, as their counterparties default, it's going to just absolutely implode Caterpillar's balance sheet. There's a base level of operating business where Caterpillar is going to function unless you think the total global economy completely shuts down, which I doubt happens. So, but they could exist and survive if they didn't have this massive balance sheet risk in the form of all the off balance sheet debt that they have. But that's what's really going to blow up Caterpillar, and that's really what's going to blow up the entire system is this hidden financial debt and derivatives. If the world was not levered to the extent that it's levered, we'd probably just be going into a standard recession. But the amount of leverage that's piled up, and everyone was bamboozled into thinking after 2008 and the Dodd-Frank reforms and all these other reforms that Congress supposedly passed, and that's going to take care of our debt problem. Well, guess what? It didn't, because now the derivatives outstanding are even bigger, and the amount of debt that's outstanding is significantly higher than it was in 2008. I mean, a lot of what the new rules did was just allow the banks and the companies that use this debt to hide it better.
What are you calling that new short sellers piece that people can get involved with?
Yeah, it's called the Short Sellers Journal,
okay.
And you can subscribe to it through my website. It's right on the front page.
Okay. Well, I just know the playbook that the controllers have, the Rothschilds, the Rockefellers, the Morgans, the people that control this game, they know when the jig is up because they're the ones that pull the lever, causing everything to fall. I mean, literally, I don't say that lightly, I say it literally. They profit when these markets collapse, they profit when the markets go up, and it would be really terrific to know when they're going to pull the trigger on this thing to the downside, because anybody that could short Amazon at $633 a share knowing that it was going to go back down below 100, boy, would it be nice to have that playbook. But
just real quickly there, and I actually do talk about timing on things like that. For instance, with Amazon, you're not going to be able to time the top because the market's so manipulated.
Right.
And you probably, the best thing to do with something like that, just wait till it rolls over.
Yeah.
You're not going to time the top, and you might get squeezed out of your short if you short it now. But ideally you'd like to ride it from 600 to 100. But once it starts falling, you're going to be able to ride it from 400 to 100. It's going to be bumpy, but you'll still be able to get that. That's still a nice gain. You're not going to take your full wad and short Amazon because you're going to get your head chopped off. But if you short small bits of it and you short small pieces of a lot of the other stocks that I come up with, you have a nice portfolio of shorts, you're going to outperform the market on the downside.
All right. Now, I just want to get back to this Market Watch article and just talk about this briefly because I think it's important. When we see the Mockingbird mainstream media try to prop up the economy with their propaganda and say that the Fed's Williams foresees up to 5 rate hikes in 2016, the absurdity of that cannot be overstated. Because if they did that, there's not even enough tax collection revenue to pay the interest on our national debt if they start to get out of control with these interest rate hikes. And in addition to that, what it would actually do to the real economy is grind things to a complete halt. So what do you make of that type of propaganda coming from Market Watch?
Whether or not they're going to raise rates 3 to 5 times in 2016, and I doubt they will, to me that's irrelevant. What caused me to almost fall off my chair when I read that article is where he said the economy's doing fine.
Right.
And I'm not really sure what data he's looking at or if he's just being completely disingenuous, just for the sake of going out there and trying to be a cheerleader on the economy. I don't really know. I mean, we'd have to sit down with him in private and find and show him the data and say, what are you really looking at here, John? Because your statement makes you look like a complete idiot to everyone out there who knows what the truth is. And for instance, just today, there was manufacturing data that was released, and the index is down to its lowest level since 2009. I think it was the Institute of Supply Management Index. It's a general economic diffusion index. But to me, the poster child for both the global economy and the U.S. economy is the price of oil. And we've heard, a dozen different reasons about, the Saudis want to blow up the U.S. shale industry. Nonsense. oh, they want to flood the market, and Russia's trying to get market share, and the Saudis are trying to get market share, and they're flooding the market with oil. That's nonsense. That might, over a very short term period, it might cause the price of oil to drop some, but it didn't cause the price of oil to drop from 110 to 35 in a year.
Right.
I mean, the reason why the price of oil is dropping is the demand for the price of for oil itself is falling. And at the margin, it doesn't take a lot of extra supply to push the price down. And that's what's causing the price of oil to drop. If you look at the price of oil now, it's back to where it was in guess what? 2008, 2009. What happened in 2008, 2009?
Right.
We had a deep recession in this country.
Right.
That's not a coincidence.
Right. Well, and where was the Dow and where was the Nasdaq in 2008, 2009? And so we're seeing real-world commodities reset to levels which describe a recession or a global depression, but we're not seeing it in the stock market. And we were talking about Federal Reserve Williams foreseeing up to 5 rate hikes this year. Why would he say that? He's jawboning, because now look at Fisher, right? Former Fed president, who admits what the Fed did, and I was a part of it, was front-loaded an enormous market rally in order to create a wealth effect, and an uncomfortable digestive period is likely now. The Fed is a giant weapon that has no ammunition left, end quote. So when you're no longer part of the Fed, you can come out and say, hey, what we did was we sparked this massive bubble and now it needs to deflate. And when you're still part of the Fed, you have to say, oh, the economy is great. We're going to raise rates 5 times this year. It's complete propaganda.
It is propaganda, and you're right. But the thing of it is, it's like financial market professionals, which are probably the bulk of who saw his statement, they know what's really going on, and he just looks like an idiot.
Yeah.
I mean, everyone laughs at these people on the FOMC now. No one takes Janet Yellen seriously, and I don't know if she just has no clue or if she just doesn't care.
Well,
and if she doesn't care, that's a sad statement.
Yeah, but I think she's playing her role, right? I mean, those of us in the truth media, the alt media, who understand what the Federal Reserve is, who's behind it, who funded it, private bank, central banking, Rothschilds, Rockefellers, J.P. Morgan, we understand that these people are simply playing their roles. She's a puppet. She's not the person at the top pulling the strings. Her strings are being pulled by those above her, those who gave her the job of Fed chairman.
That's right.
It's just important to say, it's important to state, because the truth is the truth. And the Fed is not federal. It's a privately owned corporation. It's a privately owned entity run by international banks. And we have the quote from Greenspan saying, there is no other agency of government that can veto any decision we make.
First of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take.
On the record. So what the Fed does is it propagandizes, and it has total control over a monetary system, and the American people that you see in that Mark Dice video have no clue, which gets me back to silver, man. Let's talk about it, because how many ounces of silver do you believe are above ground? If you had to pick a number, is it 1 billion? Is it 2 billion? Is it 5 billion? What do you think? It's hard to say.
I don't pay a lot of attention to the published numbers, the vault numbers. I mean, are you including like the silver that's in SLV?
Well, we don't really know what's in SLV, do we? What I'm including is all of the investment demand, the 45, 50 million ounces of Silver Eagle sold every year by the U.S. Mint, the Canadian Mint. Add all those numbers up, but you got to take a look at the global mining numbers and then look at demand, because what we do know is that demand is outstripping supply every year by at least 100 to 300 million ounces. So even if the claim is that there's 1 billion ounces a year being mined, and I think it's closer to 700 to 800 million ounces mined every year, demand is outstripping supply. So right there we have a deficit. So what I'm saying is take into account all of the silver chains and silverware and silver in people's vaults, and how many billions of ounces do you think there are?
I honestly think it's impossible to know. That the supply deficit in silver and in gold have been going on for well over a decade. Mm-hmm. So it's just a question of at some point the available physical supply to deliver into buyers is going to disappear, and I think we have even less of a handle of that on silver than we do with gold. And part of the problem with silver is 70% of it gets used up in industrial processes every year.
Right.
There's only 30% available for investment, and then there is some recycling, and I've never even seen numbers that I completely trust on recycling. So it's one of those things that we just can't know. I think for me, the way I look at silver is I key it off of gold, because going back to Roman times, and even before Roman times, as I've recently discovered, the very, very thousands of year long-term gold to silver ratio has been under 16. So everyone uses 16 because that's been kind of a modern era long-term ratio. But if you go back to Roman times, it was 8-1. Mm-hmm. And that was based on the amount of silver that's pulled out of the ground versus the amount of gold that they pull out of the ground. And guess what?
We're seeing that again.
It's about the same ratio now.
That's right. It's right
and
around
so
9 to 1.
At some point, you're gonna have just a natural supply and demand regression back towards a price that balances out the ultimate supply of silver versus the ultimate supply of gold. So then the question is, well, what price? Where should the price of gold be?
I totally agree. And let me ask you this then. So if silver is owned by precious few people, I mean, those listening to this broadcast are probably advocates of honest money and buy some physical silver and gold, but the majority of the populace doesn't own any silver coins. So let me ask you this, Dave. Do you think there's less than 5 billion ounces or more?
You're talking about the amount of silver that's sitting in private investor hands.
Yeah, physically available silver not being chewed up by industrial capacity.
Again, I just think it's too hard to know for sure. What we do know is that the demand for silver outstrips the supply, and then the question is, where is the supply coming from that's getting delivered into the big buyers of silver?
Right. My thesis is that there is less than 5 billion ounces of silver on planet Earth right now. But even if we believe there were 5 billion ounces of buyable silver that people could buy up and put in their vaults, 5 billion times $13.98 is around $70 billion. So we've got a quadrillion in outstanding derivatives, approaching $19 trillion in U.S. national debt, stated debt, and the entire global market cap for silver is around 70 billion and probably far less. So Dave, when we tell people that silver is an unbelievable contrarian buy at $14, we're not overstating the facts, are we?
I mean, anyone who wants to buy precious metals right now and who understands the reason why, and they want to convert their fiat currency into precious metals, buy as much silver as you can, because really the argument that you're making is that silver is extraordinarily cheap outright, and it's extraordinarily cheap relative to gold. I mean, when I first got into this sector back in 2001, the gold-silver ratio was about 50. It got down to the low 30s at one point, and then it shot back up. Since I've been doing this, it's been as high as 100, and it's been as low as something like 32. At some point, that gold-silver ratio is going to just scream back down to at least 16. It'll probably go below 16. So to me, it's an easy choice. You buy silver, and at the margin, like let's say maybe 1% of the U.S. population is now buying gold and silver, or at most 2%. If you double that percentage to just 5%, you're going to soak up those $5 billion ounces in a week. I mean, it'll make your head spin how quickly the price goes up once a real rush into precious metals begins. Yeah, silver will significantly outperform gold.
Well, yeah, and just to come full circle, I just want to say that you mentioned that silver is extraordinarily cheap compared to gold. It's extraordinarily cheap compared to Amazon. People will often say, Dave, well, we don't want to live in a world where there's $600 silver. And I'm like, really? Do you think the common man's paying attention? The common man doesn't know right now if silver's $5 or $1,000. They literally have no clue, just like people in the Mark Dice video, they prefer a chocolate bar.
Silver, I'll take the...
Who needs a silver bar?
Just for silver's global market cap, if you believe there's 5 billion ounces on planet Earth, which I don't, but if you do believe that, just for silver to reach the market cap globally that Amazon enjoys today, silver would need to trade between $56 and $60 an ounce right now. That's how cheap silver is. Silver is worth a fraction. The entire global supply of silver is worth a fraction of the market cap of Amazon. And that's why we say the markets are broken. The markets are lunacy, sheer lunacy. And that's why former Fed President Fisher is saying, hey, we created a huge bubble. The Fed is a giant weapon, and it has no ammunition left. So if it has no ammunition left, Dave, the collapse is coming. The collapse we've been talking about, the collapse we've been documenting with the Baltic Dry Index hitting a new low. The collapse is coming, and it really can't be stopped, can it?
You can't force people to spend money that they don't have. People, and the biggest part of the problem is in this country, because a lot of these other countries, the populace isn't as levered up as ours is. I mean, credit isn't used in European countries the way it's used here. And I think we've reached the point at which, America has always been by far the biggest consumer in the world. And people try to poo-poo the Baltic Dry Index. Oh, well, that there's a lot of reasons for that. Well, no, the number one reason for that is because demand in the United States and in Europe is falling off a cliff. And that means that the reason why China's economy is crumbling the way it is because they had become the largest exporter in the world. Well, guess what? If their customers aren't buying, it means they're not selling what they're manufacturing, and therefore there's no need to ship it. And that's why the Baltic Dry Index rates plunge like this. And to me, that plus, and when you combine that with the price of oil, that's the two scariest economic numbers out there. I'm talking about hardcore economic numbers. The scarier numbers are the derivatives, but that's a whole other that's a whole other viper's nest.
Yeah. Weapons of economic destruction, I think, is what Warren Buffett called them.
Weapons of financial mass destruction.
Yeah. Well, Dave, it's always just a real pleasure to get you on. Two kindred spirits talking about reality. I think that's why people want to tune in, because there's no BS here. You're not going to get the BS here that you get from the Fed and from Market Watch and from CNBC and from the Mockingbird mainstream media, whose job it is. These people are highly paid, highly compensated liars. And, we're just trying to break the illusions here. I really appreciate your time. Our guest has been Dave Kranzler from Investment Research Dynamics. Can you just tell us a little bit more about the website and about that new Short Sellers Journal? Just remind people how they can sign up.
Sure. My blog is Investment Research Dynamics, and I try to, as much as possible, take what is reported out there and convert it into the truth. And I do a lot of digging. I'm not married, I don't have kids, so I have a lot of, and for me it's an intellectual obsession to sort of research what's going on. We're watching history here. And so I try to present as much as I can the truth about what's going on. And I support the website with full-blown research reports that I put out, and those are available on my blog. And then this Short Sellers Journal is there's not that many people who talk about shorting the market. The long side of the market is the so-called crowded side of the boat. And right now there's a few people looking at shorting the market, and I'm trying to encourage more people to look at that side of the investment landscape, because I think that's where a lot of money is going to be made over the next few years. But you also got to be careful about how you short the market. And there's a lot of stocks. Look at Kinder Morgan. That stock dropped from 44 to 15 almost overnight. And there's plenty of other stocks out there that are like that, where the fundamentals catch up with the overvaluation of the stock. And so that's the type of ideas that I'm trying to generate.
Yeah, well, we do appreciate your voice and your intellect, Dave. And like the other truth tellers we have on the show, Rob Kirby, Andy Hoffman, Bill Holter, you're right up there with those names in terms of helping us dissect the lies and reveal truth. And I really appreciate your time. Thanks, man.
Hey, thanks for having me on. Anytime. I love being on this show. I love chatting with you. And I hope everyone appreciates what you're doing in terms of, trying to get the truth out there as much as I appreciate it.
Oh, thank you. That's very kind of you to say. And, I didn't even pay, guys, I did not pay Dave to say that. He's not being compensated for this interview. No, I really appreciate that, brother. And, we're all kindred spirits and brothers in arms, brothers in truth. We got to stand up, because the tyranny is absolutely out of control. And I do think Obama is going to bend over backwards to get our guns. And once they come after the Second Amendment, if they succeed, it's all over for freedom. So, guys, I want to thank each of you for tuning in. We really do appreciate it. Dave and I both do. And thanks for your support at sgtreport.com. Check out thephaser.com too. We hand select some interesting video content there for you. And the libertymill.com. Real news 24/7. God bless. Thanks for tuning in.